Hi everyone, welcome back to Be Rich. It is Saturday evening. I hope you had a wonderful week and you managed to get some investing done. Yes, the markets were here and there during the week. FIs were showing through data that they were buying in the market. Some DIs, some days they were buying, some days they were selling. But if you notice the overall trend in a lot of the shares we are looking at, they were negative. So I see them as opportunities. Some of you are feeling nervous because you're like, wait, the FIs are buying, the market is moving. But why are our list not moving? I look at it as something exciting. That means it's still on sale and I can still afford to go in my tiffin coffee range and my menu is wide open and I can enjoy having meals here and there during the week. But I do understand the anxiety. If you do not see, the movement you're seeing everywhere else, why I'm not being picked in the team. It always happens in sports, in school sports. You don't want to be the person picked last in the team. That means you're probably the worst player in the group. So it's like that. I do get that. But in the flip of it is, it gives us more opportunity as long as we have done an analysis right. And I do believe in the lists which I'm looking at, the companies I'm looking at, they are fundamentally sound, they run well, and the management is good, the prospects are good, and the moat is secure. It's just that Mr. Market right now seems to be a little bit in the mood with these things, because they're looking at it for 6 months, they may be looking at it in a year, while I'm looking at a longer horizon, I'm looking at 10 years and plus. So keep that in mind when you see all this news and when you're reacting to it. Never have knee-jerk reaction. So, in continuing from last week, like I said, this is a series which I wanted to do about personal investment and personal finance. I wanted to get on to today's topic where I left off last week about asset allocation. What did I want to talk about is, now that we talked about asset allocation, we need to know where your starting point is. Before any journey, when you put in Google Maps where you want to go, Google Map needs to know where you would like to start from. Even Uber will say, do you want to start from here? Do you want to start where you would like to start your journey from? So it's always important to know where you are and where you're starting from. In that endeavor, knowing your starting point where you are before you start investing is very critical. Even before knowing where you want to go, it is important to know where you're starting from. So what does that mean? That means looking and taking an assessment. You'll be surprised by what you might find in your Excel sheet when you start entering. So what should you look at first is, where is all your money at and what are the weightages and the split in your money. You could have first category which asks you to look at is something known as fixed income. Those are things like your FDs, your bonds, mutual funds which are in debt, provident funds, other saving schemes you might have like the postal saving scheme. So whatever saving schemes you have which are considered fixed income, put them all in one tabular column and add that up. Next thing which I want you to look at is equity. Equity is things which are like stocks, portfolio management schemes some of you might be wealthy enough to have, or mutual funds which are in equity, either passive or active. Then it's also important to break it into sector-wise and geographies. Some of you may be fortunate enough to already invest outside India. If that is the case, make sure you detail granularly and put in full detail, in full spectrum, where all your money is. Next category after that is real estate. Real estate could be land holding, could be houses, could be apartments, even commercial spaces. Put them all down, list it down. And whatever you think the current market value which you approximate it to be. The category after that is gold and silver. A lot of us have inherited some gold and some silver. So whatever you can approximate. I'm not asking you, if you are fortunate enough to know these things in detail, put the details down in grams. If you do not know, approximate, put a ballpark what you think is, and today's gold rate and silver rate, multiply it and enter it down. Some of you have been courageous to get into other asset classes, could be art, could be crypto for some of you who believe in it. I don't have any crypto or any art. If you have that as an asset class, list it out and enter those details in. After you've done all this, this is all your assets which you currently own and you know your value, what it is at. Before we get to know your net, we need to know what all you owe. That put in another column called liabilities. Liabilities could be a housing loan, could be a car loan, student loans, and God forbid if you have any credit card loans and personal loans like my friend Arun behind the camera. If you have those, make sure you're honest and you list them honestly, because no one else is here to see you. It's just you and your Excel sheet. So it's time to be honest. It's like standing on the weighing scale. So enter all those down. Once you've done this, you'll know where you are, where you truly stand. This is the starting point of your journey. Now you can ask the question, where would you like to go? And that is an interesting question, because that question will tell you how much distance you have to reach where you need to go. And that will be very fundamentally important to get into investing and deciding what to do. Once you know where you need to go, you know what asset classes you've been investing in, and you know how your split is, what your weightages are, it gives you a clear understanding on where you're standing on. From here, you can look at the changes you want to make to your investment and your portfolio, because you clearly know what your asset classes are, how much you've invested, what your liabilities are, how much you owe, know where you want to go. You can start thinking about what are the levers you want to change, what you need to do to get to where you want to be. But one important thing which you must keep in mind is, this is the first time you're going to be looking at risk. So each individual asset class, look at the risk which is there. Risk can be market movements. Every market goes through cycles of up and down. These asset classes, what is the risk which is exposed, you have exposure to in this? Like real estate markets, you can imagine it to be at a certain price. Only when you go out to the market and try to sell your parcel, you realize how much the true value is and how difficult it is to get the price you're imagining it to be. So there's lots of risk which is there inside these things. Even gold, for example, it is liquid, but you have to go to the locker, take the gold out. There's lots of things. Some of you may be living in another part of the world and your gold is another part of the world. So there's a lot of things to take into consideration. So do put your risk down in writing. Then find out what controls you can put and measures you can put to handle this risk going forward. Because now you've decided you're here and you'd like to arrive at another destination, and you know the distance you have to travel, you know how long it's going to take based on the changes you plan to make. Make sure the risks, controls you put into place, handle this risk which you can see. And can you stomach the risk is very important to know. The reason why I'm saying all this is, this will help you make a plan finally. And when you have the plan, more important than the plan is sticking to the plan. Any plan is only as good as it's followed. This is true in dieting, it's true in weight loss, it's true in war, in any military strategy. People who turn out to be victors at the end of any situation is people who not only make the plan, but actually implement and stick to the plan. So learn to follow your plan, especially when markets get brutal and markets start moving up and down. Like I said last week, we saw the FIS doing this and that, but you did not see movement maybe in your favorite stock or in your favorite portfolio. Remember that you have a plan in place and you know where you're going and you know what you're doing. That is what I want to talk about tomorrow. Tomorrow I want to talk more in depth about doing it yourself, as they say, DIY investor, how you should learn how to become an investor by yourself, how knowing and knowledge is very important and fundamental to investing. Do keep in mind, tomorrow I'll also give you an opportunity to understand about how to mitigate your risks, and I'll talk in deeper about how to lower your risk. Thanks for watching the video today. The video was a little shorter one than my usual ones because I wanted it being a Saturday evening, not take too much of your time, other than give you a brief and some homework to do and some food for thought over the weekend. And I'll see you Sunday evening. Hopefully you would have spent some time cranking out some Excel sheets on Sunday morning and probably have some more data in your hand for us to discuss tomorrow evening. Thanks for watching, Be Rich. Hope you have a wonderful evening. See you again tomorrow. Bye.